Hey crypto friends, for those of you who are new to the channel, my name is Garrett and welcome to Altcoin Radar. Today I am going to show you guys 3 different trading strategies that you can use, and these are super basic trading strategies that you can use if you only have $100 to trade with. So, before we actually dive into this video, for those of you who love trading crypto and would like to try out the same crypto exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange with the link in the video description down below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. So if you are from the United States like I am and you want to trade crypto futures, you can do it right here on the Blowfin exchange. The only places in the US that you can't use this exchange on are New York and California, I believe. And that has nothing to do with Blowfin, that has to do with state laws. So, how do you trade with $100? Here's the thing, all right? There's a lot of people out there who want to get into trading, but they simply don't want to start with a big or a large amount of capital. And there's honestly nothing wrong with that. Everybody starts somewhere, but the thing you have to keep in mind is if you want to start trading, here's the thing, all right? You want to keep your risk extremely low, okay? So if you're trading with $100, you only want to be entering each trade with like $25, okay? And the reason why is because you want to minimize your overall risk. And by doing so, this means if you end up losing the trade, then you still have an extra $75 left over to be able to trade with, okay? Now, I know this probably is going to, I know that probably sounds like kind of a hassle to some of you simply because you want to make the most amount of money possible. But here's the thing, if you only have $100 to start with, you want to take it seriously and you want to be able to manage your risk as much as possible, okay? Now, in addition, these strategies that I'm going to be showing you here today are extremely basic. This video is mostly geared towards beginners who want to get into trading the crypto futures market, but only have a very small amount of funds to deal with, all right? So these strategies are very super basic strategies, okay? Now, the next thing I'm going to be talking about here real quick is we will also be scalp trading, okay? I'm going to be showing you these different strategies on the 15-minute charts because we want to be able to use that $100 effectively and we want to be able to make profits on a daily basis, all right? Now, another thing I want to go through here is we only want to be using 10x leverage on our trades, okay? And the simple reason why is because this is a good number, a good middle ground number to be able to keep our risk low enough to where, we're not, using, 30x or 50x or something like that and taking the chance of liquidation and losing our funds extremely quick, okay? Now, another thing I want to go through here is we are going to be using, or you want to be using other indicators for confirmation as well, okay? So for each of these strategies I'm going to be showing you here today, you can't just use the one indicator and that's it, okay? I mean, you definitely can and you can try it out and see if it works for you, but you want to be using other indicators in addition to these indicators to be able to make sure that, the price is going to go in the direction that you think it's going to go. Now, another thing to talk about here is we only want to be the types of coins that we want to be trading, okay? The types of coins you want to be trading is you want to be trading coins that have high amounts of daily volume on a regular basis, okay? And this is why I typically usually always tell people to stick with the coins that are within the top 100 by market cap. And the reason why is because these coins always have a high amount of volume on a daily basis, all right? Now, the last thing that I want to talk to you about real quick before we actually get into these strategies is you have to be realistic, okay? If you want to take trading seriously and you want to turn it into something serious, then you have to be realistic about this and you have to understand that you will not win every single trade that you take. There is not a trader in this entire world that wins every single trade that they take, okay? So, the first strategy that I want to go ahead and show you guys here is going to be with the RSI indicator, okay? Again, these are super basic strategies. So what you want to do is if you don't know how to do that, here on TradingView, if you don't have an account on TradingView, just sign up and do whatever and sign up and, you'll have your watch list over here and your charts in here. And you want to go to indicators and you will type in RSI. Okay, and it's going to come up as relative strength index and you'll just click it and it will add your RSI to your chart at the bottom here, okay? Now, the way that you use the RSI indicator, all right, is the bottom dashed line down here represents the number 30. The top dashed line represents the number 70, okay? And the middle line represents the number 50, all right? when this line, when the RSI line, which is my green line right here, when my RSI line reaches down below the 50 level, it technically means that conditions are oversold. It technically means it's oversold and price is due for a correction, or price is due for a reversal to go back upwards to the upside. But that does not always happen, okay? This is why you have to pay attention to other indicators to be able to tell if, price is indeed going to start going back up or not. Because as you guys can clearly see, it's been under the 50 level for quite some time here, all right? And it has not started to go back up yet, all right? So the way that you can do this is you can use the white line, which is the moving average within the RSI, to be able to get a good generalized idea of when that's going to happen, or if it's going to even sustain, okay? So basically what happens here is, as you guys can clearly see, when the RSI drops below the moving average, it typically means and signals that price is going to start dropping, which, as you guys can clearly see right here, hey, we dipped underneath the moving average right here and we started dropping all the way down. And as you guys can clearly see right here, we dropped down to the neutral area in the RSI and it started to go back up and heading back upwards towards the moving average, but it failed to cross the moving average and instead started to go back down again. So you'd want to stay in your trade right there. Now, in a situation right here where it does start to go back up, this is where you would want to sell your position or take profit on your position, because we ended up crossing back over and it started gaining a little bit momentum and started going back upwards again. So you'd want to sell right in this area, all right? So if you were to have taken that trade, let's say you entered that trade with $25, let's see what you would have made, all right? So if you were to have shorted that position right there, so if you took a short position and sold right around in here with 10x leverage, you would have made about 20% profit right there on that trade, okay? So if we were to go ahead and take your $25 and multiply it by, let's see here, 20, we're just going to say 20%, so 0.20, you would have made roughly $5 on that trade. All right. Now, I know that might not sound like a lot to you, but you guys have to keep in mind that you are only using a small amount of your $100 to minimize your overall risk. Okay. You can't come into this. If you're serious about being a trader, you cannot come into this and expect that you're going to turn $25 into, $500 with one trade, all right? If you want to take day trading seriously, you have to be realistic about this stuff, okay? $5 is a big amount of money to make for a $25 position, all right? So you just made $5 right there. Cool, fine and dandy, right? Now, you can make that same type of trade multiple times throughout the day as well, because that one single trade, let's see here, that one single trade would have lasted about roughly 6 hours or so, all right? As you guys can clearly see right in here, 6 hours, all right? So that is it pretty much for the RSI. The only other thing I can talk about with the RSI is you can also ride the big swings here on the 15-minute chart as well. So for instance, let's say, here, we'll go back and do some back testing here and I'll show you. So as you guys can clearly see, we had this big downtrend right in here on the 15-minute chart, and we bottomed out right down here. And price did start to gain momentum again, and it went upwards above the moving average right here very, very strongly and sharply, and it went all the way up to the top, all right? And as you guys can clearly see, once it got to the top, it started to cool off again, and that's simply because momentum started to get weak and people started taking profit on their positions, all right? So again, you could have ended up trading that one as well, and you would have made, let's see here, if you would have ended up getting in right here and going all the way to the top up here, you would have made roughly around, this is a much bigger one, so you would have had made around, it says 6.2%, but if you were using 10x leverage, that'd be about a 60% trade. So with your $25, you had made $5 before on the previous trade, and let's see here, so now you'd have $30 in your trade. So if you had $30 in your trade, $30, and we're going to go ahead and multiply that by 60% because you just made 60% profit, you would have made $18 on that trade. So now your $30 is now up to, roughly up to $48, all right? So realistically, now you've got $48 to work with in your next trade that you're going to take. So as you guys can clearly see, it's just going to compound over and over the more and more you continue to do it. So guys, overall, that's going to pretty much do it for the RSI. Keep in mind the RSI indicator is a lagging indicator, so it is kind of slow with price action. But the next RSI indicator that I'm going to show you here is going to be the Stach RSI. All right, which is more of it moves a lot quicker, we'll just say. Okay, so as you guys can clearly see, to get the Stach RSI, you just come up here in the indicators again, you type in Stach RSI, and you click it, and it will add the Stach RSI on the bottom of your chart here. Okay, now this works very, very similar. It's the same exact concept to the regular RSI, and we have got both of our lines right in here, and as you guys can clearly see, price action moves frequently with the way the Stach RSI moves very, very in tandem with the way price action moves. As you guys can clearly see, right up in here, we started dipping. We started dipping in the Stach RSI, and price started dipping as well. Okay, now you can clearly see that movement on the Stach RSI started to move in a straight flat line here at the bottom. That typically means that momentum, that shows you that is a good solid indicator right there. That momentum has still not started to grow yet and is still very, very small. Okay, and it started to go up, but it did not end up crossing above the 30 area, meaning we're still extremely oversold, and it ended up going back down again, so momentum was still extremely weak. And then it ended up bouncing right here, and you can clearly see that on the chart here, or you can see it in the price action here, and you can see it on the Stach RSI as well. All right, so again, we're going to use this same example. All right, you would have ended up taking a short position right up in here at where it starts to, or where it starts to drop, obviously, and you would have ended up staying in the position down to right about in here, where you can clearly see it started to rise back up again. All right, because you want to get out of your short position when when momentum starts to build again and starts going back upwards again. So again, you would have made roughly 2.69%. So 2.69% times your 10x leverage, you would have made about 26.9%, 26.9% profit right there. So again, you've got your $25, multiply that by 0.27%, and you would have made $6.75 on that single trade right there. All right. So again, the Stach RSI works very, very similar to the regular RSI. It's just a little bit quicker. All right. It moves a lot quicker than the standard RSI. All right. So we'll go ahead and delete the Stach RSI, and the next indicator I'm going to show you here is going to be the EMAs. All right. Now the EMAs, the ones that work the best for this type of trading, or for this type of day trading, is usually the 20 and 50 period EMAs. All right. So what you'll do is you go to the indicators, you'll type in EMA, and you'll click on this EMA 20, 50, 100, and 200. And it will add it to your chart, and it will be up in here this time. And what you want to do is you want to click on the settings icon, and you want to, these two will be checked, which is the 100 period and the 200 period EMAs. You want to uncheck those so that they don't show up on your chart. But all that we have left is the 20 period and the 50 period EMA. And realistically, I use a variation of the 20 and 50 period EMA strategy myself. This is actually part of my go-to strategy. I use a lot more than just using the EMAs, but these two EMAs play a big part in my personal strategy alone. So what you end up doing here is when price action starts to move below both of the EMAs, that's pretty much telling you that momentum is starting to get extremely weak, and you can take a short position. Okay, so I would have entered a short position on this as soon as this red candle right here started to drop below these EMAs. That tells me that momentum is starting to weaken big time, and I can enter a short position. So I would end up entering there, and I would end up riding it all the way down as long as price action is below both of these EMAs right here. I'm still good to be in my short. Now, as you guys can clearly see, price started to go back up above the EMAs right here. But as you guys can clearly see, this 15-minute candle, it went above the EMAs, but it did not close above the EMAs. All right. That tells me that momentum is still weak. All right. And because momentum was still weak, the next 15-minute candle opened, and it continued to go down as well. All right. So you'd still want to be in this trade at that time. So realistically, if you were in this trade right now, you would have profit. You would be profiting so far. You'd be at roughly around 30% profit right now, all right, within the last 5 hours and 45 minutes, all right? And you can clearly see it right there. And you can take profit whenever you want to take profit or whenever you feel is good enough to take profit. But realistically, you want to take profit when, as soon as, or, obviously, if either a good time to take profit with these EMAs is either when price action is extremely far down below the EMAs, or it starts to go back up and it does end up crossing and closing above the EMAs, and momentum starts looking like it's starting to build once again, all right? Now, in a long position scenario, if you want to go long instead of short, here is a good example of that right here, all right? Price was downtrending quite a bit, and then it ended up going up, and it crossed both of the EMAs back up to the upside, okay? This tells us that momentum is starting to build, which is a very, very good thing. So we want to go ahead and we want to enter a long position right in there, all right? I would have personally ended up waiting until the next 15-minute candle opened, so I would have entered right in here, all right? And you would continue to hold, or you would end up holding that position. Here, obviously, you can see that it started to go down below the EMA, but it did not end up going below this EMA, or it didn't end up closing below that EMA. So you want to stay in your position. And the same thing happened right here. It did not close below the EMAs, so you stay in your position. And same thing here, you guys. It went down, but it did not close below both of the EMAs. It started still continuing to go upwards. And you would have ended up obviously wanting to get out right in here, all right? Because the 15-minute candle ended up closing outside of the EMA right here, okay? So as you guys can clearly see, you would have had a very big trade right there, or a decent sized trade right there. So if you ended up going with this trade, you would have made roughly around, let's see here, around 7%, but with your 10x leverage, you would have made about 70% profit right there within 1 day and 3 hours and 15 minutes, because this is a longer, this was typically, obviously, as you guys can clearly see, this uptrend took a little bit longer, but you would have made roughly about a 70% profit gain right there just from using the EMAs alone, all right? Now, if you would have ended up selling, instead of selling when it crossed right here, remember what I was talking about earlier, where you can sell if the price action starts to go way above or below the EMAs. If you would have instead sold right in here, you would have made more profit as well. So let's see, if you would have sold right there, you would have made roughly around 100% profit with your 10x leverage, all right? So realistically, 10.30, multiply that by 10x leverage, you would have made roughly 103%. So with your $25 here, we're going to go ahead and, 100% of $25 is another $25. So you would have made roughly about an extra $25 right there. So now you'd be up to $50 profit. So overall here, you guys, these strategies do indeed work, but you definitely want to use other indicators together to, overall confirm your overall bias. For instance, I like to use my 20 and 50 strategy, and then I also like to use my RSI as well in addition to it to kind of give me a good confirmation of where price action currently is, all right? So again, you can use any of these three strategies if you are looking for an extremely basic strategy to use, all right? But overall here, you guys, that's going to pretty much do it for this video. If you guys have any questions or anything like that, I know I gave all kinds of information in this video, but if any of you guys have any questions or anything like that, feel free to go ahead and reach out to me in my free community Discord channel, which you can access with the link in the video description down below this video as well. But other than that, you guys, that's going to pretty much do it for this one. So I will go ahead and wrap this video up. But if you enjoyed this video and you feel like you got some decent value out of it, please make sure to go ahead and subscribe to the channel, hit the like button below the video, and leave me a comment below on your personal thoughts on what you think of these strategies. And with that said, you guys, for those of you who stuck around and watched this whole thing or watched this whole video throughout the whole thing, thank you guys very much for watching. I appreciate all of you, and I hope to see all of you in my future videos as well.